delay in this. What I'll do is I'll go through the presentation, and then obviously if we have some questions, answers, we'll do our best to answer as many of them as we can towards the end. It'll probably be about 20 minutes going through the presentation, and then we'll see how we're fixed and how everybody else is fixed. So look, thanks for your patience. I'll kick off. So enhanced report requirements, I suppose just to sort of give an overview, it was introduced in the Finance Act in 2022 under section 897C. And this obviously requires employers to report to revenue details of expenses and benefits that are provided to employees or directors. And this commences on the 1st of January 2024. So that's for payments that are made, I suppose, to employees or directors from the 1st of January 2024. So the three categories that we're looking for information on are travel and subsistence, the small benefits voucher scheme, the small benefits exemption, and remote working daily allowance. And that's the amount is paid by an employer for employees who are working remotely. So again, the three of them are categories in which payments are made without the deduction of tax, USC and PSI. And there's various tax and duty manuals and information on the website specifically about those individual categories on our website. As I said, the links are actually on the hub that we provide for ERR specifically. So if you go there, you can get some further information on them, but we will talk to them somewhat also during the presentation. It is subject to a commencement order, and that is due to be signed by the end of the year, which is sort of standard practice. But as I said, it'll begin on the 1st of January. So this is phase one of the enhanced report requirements, and the payments related to those three categories will be reportable on the 1st of January 2024. So what we're doing is we're building on the principles, I suppose, of real-time reporting. So this is a general policy that revenue commissioners are looking at and expanding on across various tax heads. We do expect it to form part of existing business processes. So in other words, as you process these payments, wherever you record them, when you're, I suppose, making the payment to the employee or the director, that as part of that existing process, you build in the reporting then function to the revenue commissioners, similar as you would expect from a payroll reporting perspective, if that's a good example. So one of the questions we get asked is what's the point of this? And like as I said, these are emoluments effectively. This is pay that is being paid to an employee or director without the deduction of tax. And obviously that comes with caveats, and there's specific regulations and legislation around those particular types of payments. So if you're making, I suppose, a payment to an employee without that deduction, obviously you need to satisfy yourself as an employer that you're making that, I suppose, deduction or lack of deduction, should I say, appropriately. What that means then from I suppose, a government perspective, so the Department of Finance introduced these, I suppose, measures, particularly the likes of the small benefit exemption or the remote working daily allowance, whereby it's I suppose it's an incentive or an added incentive for employers, and a benefit is provided for employees, and it's a cost to that. So that cost then needs to be, I suppose, understood, so that the Department of Finance can make judgments as to how effective it is, and to ensure that they're getting the best value out of it. On top of that, then the revenue commissioners will be using the information that's coming in as part of our compliance interventions, and using that to, I suppose, risk assess the highest risk cases based on that real-time information. And what that will mean effectively is that I suppose the compliance teams will be able to focus their resources more accurately, which should mean that less interventions are carried out on more compliant employers, and allows us to then, I suppose, ensure that we provide the right resources in the right place, so that we're supporting compliance and targeting, at a very high level, the high risk cases for non-compliance. Also, increased visibility for employees. So the information that you report to revenue will be available in My Account for employees. So they'll be able to see at a high level the submission data that is made. Again, you can make a comparison to the payroll side of things for that. So as I said, the ERR, the enhanced reporting requirement, is leveraging on existing kind of design principles. So again, we're trying to build in some familiarity, I suppose, and with a large portion of people who will be responsible, I suppose, for reporting this in organizations, may be also familiar with the payroll processes. So in the same sections, you'll be able to find the access to the systems for uploading this information in ROS. And the screens and the flow should be somewhat familiar for people in that end. Obviously, if you've not done that before, we've learned from experience in providing those screens and that flow, and hopefully it works well for people who are coming in for the first time to do this. So within ROS, as I said, you will be able to, I suppose, submit, obviously. You'll be able to amend or correct the data that you make for enhanced reporting requirements. And then you'll be able to do some checks, obviously, at that submission level to ensure that your data is as expected. I suppose this is particularly important when you're using third-party software, or even just as a general practice, that you do some reconciliation to ensure, I suppose, that the accuracy of the data that is on our side reflects what you see on your side. So as I said, with third-party software providers, you'd be using a potentially different interface that would be talking to our systems in the background. So it's certainly worth going in and checking those that data to ensure that it is as you expect it to look when it's actually landed in our system. So the facility will be there, obviously, for third-party software, as I've alluded to, and this is an ongoing engagement that we are having with those software providers. So this is payroll software providers, financial management systems, HR management systems. There's a plethora of various mechanisms for which these payments are currently being recorded by employers. So the facilities for those software providers to engage with us have been ongoing since earlier this year, and we sent out some notices to try and encourage employers, I suppose, to engage with their third-party software providers, and then encourage them, if needed, to, I suppose, interact with our service user group. And that's a technical team that's set up specifically to talk about the interface and how this software interacts with our systems in the background to try and make this process, as seamless as possible. So the functionality, as I said, will all come into effect for employees in January 2024, but for employers, the ability to report will be made available by December. So you'll be able to start reporting the payments, I suppose, that are due to be paid on the 1st of January or later in the year. Again, under the basis that it must be reported at the time the payment is made available to the employee, or in advance of that. So based on that, if you know that an employee is going to get a payment on the 1st of January, well, then the facilities will be live, as I said, in December for you to come in and make that report in advance. So, again, similar to how payroll operates, it must be reported when the payment is being made to the employee, or if it's suitable to the employer, they can do that in advance at any level ahead of the time, as long as it's on or before, I suppose, is the main caveat there. So just a little bit on the actual categories. So again, just to remind you that this is from the 1st of January 2024. So the three headline categories are travel and subsistence, small benefit exemption, i.e. the vouchers or gifts or non-tangible or tangible items that are given to employees, and the remote working daily allowance. Now we're trying to keep the reporting data as low as possible, but also we have to be mindful that it has to be meaningful so that we can actually carry out that analysis, and the Department of Finance can also use it as something meaningful for their own assessments. So for the travel and subsistence, we're looking for the date and the amount paid. That's effectively what we're looking for in relation to the subcategories that you can see here. So the 7 categories that were falling under travel vouched and unvouched, subsistence vouched and unvouched, and then site-based employees, which also includes country money. Again, it just sort of is a term there that people will be more familiar with, but the actual site-based employees, TDM, outlines the details around country money. And then there's emergency travel and an eating on site. Again, all payments made under any of those subcategories have information on our website. There's TDMs dedicated to areas of that, so you can ensure that the payment that you're making falls into that category. What we're not looking for mileage, we're not looking for CCs, we're not looking for the destination. That information obviously must be recorded as normal, but it doesn't need to be reported in the submission that's made to us. So in an example here, somebody may do some business travel in December, and they make their submission to the employer sometime in the end of December, and the employer then is going to make that payment on the 7th of January, for example. So the employer will have to satisfy themselves, number one, that it is a qualifying travel and subsistence payment that can be made without deduction of tax, and then decide under which category this payment is being made. So if it's an unvouched travel, so that would be, for example, being paid mileage rates under the existing civil service rates or lower. If it's a vouched, say, subsistence payment, well, an example of a vouched subsistence would be a receipt for a meal, that was required as part of the travel. So again, there's a lot of conditions attached to all of these various subcategories, and the employer should satisfy themselves that the payment being made falls within those categories, and then reports it as such. For the small benefit exemption, again, we're looking very minimal, the amount that was paid and the date that was paid. So obviously with the small benefit exemption, up to 2 benefits can be provided in any given year, and the total value of those benefits can't exceed €1,000. So for most employers, reporting on the small benefits should be only 2 maximum submissions a year, given us again the date and the amount paid for that employee or director. The remote working daily allowance, again, the only addition to this is the number of days. So in other words, if you're paying the remote working daily allowance, which is $320 a day, we would have an expectation that a maximum of $320 a day would be reported for a number of days, be it weekly or fortnightly, monthly, or ad hoc, whatever way the business operates. That's a system. So an employee may make a claim, I suppose, for 2 weeks work, and then that'd be 10 days, perhaps, so 10 working days over those 2 weeks. So in that case, the employer would be reporting 10 days worth of remote working daily allowance and the amount then that was paid for that. So the maximum, like as I said, is €3.20 a day. So for 10 days, the maximum we'd expect to see there is €32. And again, the date that payment is made to the employee. So any of those payments, as I said, that are made beginning the 1st of January 2024 onwards should be reported regardless of the period in which they, I suppose, apply to. So as I said, the good example there was the travel that happened in December. One area that we caveat in this is that it's only on incurred expenses for the employee. So in other words, the employee must incur effectively some level of expenditure in relation to travel and subsistence particularly, and the employer is reimbursing them for those for that payment. So in other words, like that, the subsistence or the travel, the rates, the overnight rates, and the civil service rates, these are all, I suppose, agreed levels of expected I suppose, expenditure from the employee in maintaining their own personal vehicle and then traveling to business on business for business reasons, and again, just satisfying themselves that they qualify under those various headings. So I suppose what that means is if, for example, the company credit card is being used by the employee to pay for fuel or to pay for the meal or to pay for the overnight accommodation, in that case, the employee is not incurring the expense directly. The incurred expense there is on the company credit card, and the company are discharging that directly. So there's no reimbursement to the employee in that example. Another example would be if they say the employer was paying for toll tags directly with the provider, or if they were paying a hotel directly by a company account. And again, the employee has not expended any of their own resources in getting that benefit or using that facility. So again, that would not be reported, and it doesn't fall within the scope of the enhanced reporting requirements. So on top of that, it's an employee or a director. So again, the definitions for employees and directors are set out in legislation. I suppose a rule of thumb, particularly for an employee, is if you're paying them emoluments, they're your employee. If you're in receipt of emolument, you're an employee of that employer. I think that's just a general rule of thumb. But if there's specifics in that, people can come and ask those questions, and we can deal with that at a later stage. And again, directors are set out legislation as well. So anything that falls within the scope of employee or director, and the 3 categories would have to be reported. On occasions, directors may not be on payroll, but they would still be required to report this information, even if the director is not on the payroll. As I said, country money is included under the site-based employees TDM. So again, I'd encourage you to go and have a look at that, particularly if that's an industry in which you pay that. And with the country money, again, has very specific responsibilities on the employer to ensure that they're meeting to make sure that a payment is being made legitimately. As I said earlier, there'd be no requirement for reporting of kilometers traveled under the travel category. So, we're trying to keep the level of granularity down to as low as possible to reduce any additional burdens that are not necessary. And then obviously some of these payments can be made which exceed the thresholds. And, for the small benefit exemption, for example, if benefits are provided under that category, it's €1,000 is the maximum for which a tax-free benefit can be provided by the employer. But if additional benefits are provided, then they would fall under the normal rules of taxable payments. So anything that falls into the normal rules of tax payments should be reported on the payroll, as would be the case. And I suppose it's important to point out at this stage as well that nothing has changed in the legislation around any of those three categories. Everything that applies to them, that has always applied to them. So, your current business practice, as long as it's within the existing guidelines, is expected to continue. The only addition to it is that it must now be reported, I suppose, at the time of payment or in advance of that payment. What I have on screen there is just a copy of notice that was sent. We sent it to a number of representative bodies and just asked them to share it with some of their client or some of their some of their members, to see if we can just encourage other engagement from software providers. Obviously, from our side, very difficult to identify particular software providers outside of payroll. We have a very long-standing relationship with payroll software providers, and it was easy to identify that cohort of providers. But with the wide range of different providers that are out there, we did look for people to, I suppose, talk to their providers and encourage them then to join, as I said, the service user group, which was used to help them build their services. So as I said, that engagement has continued. We do have a sort of meeting every fortnight. I think there was a gap in the summer for 1 or 2 meetings, but particularly every fortnight they'd get together and go through the issues. That is at a very advanced stage at this stage. So all of the testing is now being done. The systems are in place for those software providers to do their own testing and ensure that their systems are meeting the capabilities that are needed to report this on the 1st of January. So again, I would say though, if you're looking to find out if one of your own providers is engaged in that, we can't give that information out directly, but I would encourage you to talk to your provider yourselves and ask them if there's anything on the systems that you're using to record any of these payments that needs to be looked at for January, to see if they're engaged, or if you need to, you find, I suppose, alternative options in relation to reporting, which would be probably through Ross. As I said, this is an ongoing development. Every element of it has been, I suppose, developed on our side. There's still some testing, as I said, between ourselves and the third-party software providers, and a little bit of business testing on our own side, but everything is pretty much ready to go. So as I said, this is expected to be ready and running from the 1st of December or early December for people to start using our services. Obviously, you have to talk to your third-party software provider to see if their services are going to be ready at that stage or not, but that's something that you can decide on a business level. So as I said, that engagement is ongoing. We've engaged with software providers, employers and tax agents and other representative bodies. So that's been ongoing throughout the year. So our initial, I suppose, notification we sent out in January would have went out to employers that were registered with us. So we sort of continued from there, I suppose. So what I'll do now is I'll just go through some of the screens that we have that are going to be available in Ross, just to give you an overview as to what would look like when you're coming in to report for this in January. So I won't delay too long going through this, but it is just to kind of, I suppose, show you the flow. As you can see, you go into Ross, you go into your client services, and the option there for the enhanced report requirements are listed along the bottom here. So again, depending on what you need to do, you can come in here and start that process from that point. One process that has to be sort of bedded into this system, again, this touches on the piece where the person reporting this may not be the payroll person, or they may not even be connected to the payroll person. So we have what's called an employer reporting notification. So this is a request that can be made by file upload to look for the employment IDs. So the employment ID is a requirement in payroll, and that's provided by the employer themselves. Obviously, if you have the employment ID, you don't need to do this process. If you don't have it and we give you back the employment ID, you only need to do it once until you get the employment ID that's relevant to the reporting that you're going to be doing. So I suppose your Ross certificate, your access to this will be sort of decided on by the employer or in an agency by the agency, and that subcert can be created to allow different people report these things. So it can be a separate subcert for ERR to payroll particularly. So whoever has a cert for payroll will if they're going to report an ERR, will need to get a cert for ERR then separately. So as I said, they may not have the employment ID, but if they upload a file looking for the, I suppose, PPS number is the main piece of information that they will have to have, and they can pull that file up and upload it then. As you can see there, it must be in JSON or XML. And they're the file formats that we always use, and that's been similar for payroll then as well. So simply just find a file on your system, put it somewhere where it's easily identifiable, and then sign and submit that. And effectively what we'll do is we'll return the results that give you the employment ID based on what was on our record. So if that PPS number matches an employment ID that's held on our records for payroll, that effectively allows us to report that back to you then. That's the permission that you've been given as part of your ROS digital certificate. So this then will need to be included on the report that's submitted then. So submitting the report is either done by file upload or completing the online form. Obviously, file upload is a bulk upload facility that allows you to submit multiple employees, multiple payments, multiple categories in one go. And the online form allows you to build that a little bit sort of slower in our systems. So, you know, it may be more useful for people with, you know, a smaller number of employees, where the file upload, if you've got a larger number of employees or a large number of payments that are being made, is probably more suitable. So again, in the client services portal, you can see the two options. Submit expenses benefits is listed there. Once you click on that, you'll be optioned then to do the file upload. So effectively, it's just select the one that you want. In this case, we're going to select submit expense benefit by file upload. Again, you'll browse your file, look for it in a folder that, you know, sometimes these things are in your downloaded folder, especially if you're producing a file out of a third-party software. And then it'll allow you then in XML or JSON to provide that. They're the only two file types that we can accept. And again, it's a case of signing into the ROS digital certificate, entering your password and submitting that to us. So you will get a notification to acknowledge receipt, and you can see that the status is completed, so you can be satisfied that the information has been reported to us. Again, it may be, you know, valid to go in and especially early in this process to make sure that what it looks like then on our side is exactly as you intended, particularly with a file upload, as there could be lots of different categories and people within it, and it just to be, I suppose, reconciling the information to ensure that it's valid. The other version, as I said, the option then is to complete an online form. So again, you'll be given the option when you click on report ERR to select here, submit expenses by online form. You select the year that's relevant, in this case 2024. And in this example, we have an employee who's already been, I suppose, added at some point or another. So this person, you can just select this person then as they've been previously uploaded. If not, you can see there, my employee is not on the list. You can add an employee then using that function. You can also edit the details there if necessary for those employees. So the information in relation to the employee or director. So again, depending on the information available, the user will have to complete different fields within this category. So where the PPS number or the employment ID are not available, that's where we're going to need an employer reference. So this is again a similar process that you'd find in payroll, where this employer reference remains the same throughout the process until the PPS number has been added, so that we can use that to reconcile the reports that have been come in the meantime. You'll also need to put in the personal details, including the date of birth and the address, again, to make sure that the matching process is as accurate as possible. Obviously, if you have the PPS number and the employment ID, you'll just need the names, basically employee details and personal details. This screen just shows the first, I suppose, of the categories. So in this example, we have the employee Patrick Starr, and the category is under travel and subsistence. In this case, it's been assessed that an appropriate travel vouched payment is due for €50, and that payment is going to be made to the employee. Forgive the dates there, obviously it'll be in 2024, but whatever date from the 1st of January 2024. So, you know, again, the employer has satisfied themselves that this employee is entitled to this travel vouched payment. It's a vouched payment, which means a receipt has been provided in I suppose, confirmation of the entitlement. And then, you know, following existing, I suppose, principles and guidelines and requirements, all that is recorded and available then for inspection if necessary at some stage in the future. So copies of those receipts, again, those processes aren't changing. All we're asking for is that you now report the information at the time the payment is being made. So again, once you're happy that that's the information, you'll be given the screen to ask, do you want to add another benefit or expense for this employee? And so you could go back and add, say, a small benefit. You could go back and add a subsistence vouched, and you can build up a report here, I suppose, ready for submission at the end, depending on how many payments are due to be made to that employee, you know, either on the day you're submitting or in the future, if that's the case, if you're doing it for a future payment. If you're happy that you have everything, you click on continue, and you'll be getting a quick kind of, I suppose, summary of what you've submitted, and you basically can either amend that, delete that, or you can add a new one. So once you're happy, you tick the box to say that these details are correct, and you submit that expense or benefit, sign and submit your digital certificate, and again, an acknowledgement message will come back to you to let you know that that has gone through. If you do start the process and don't submit, there will be a partial save facility in the system, so you'll be able to come back to that, and you can discard it if you want to start from scratch, or you can continue with that previously submitted or previously started, sort of submission process. So again, just it's a system there or a facility there just to sort of help you out, especially if something happened mid-process. Again, just some details here of an example, I suppose, where the information has been reported but is outside of the expectation. So we are building in some, I suppose, warnings, where the expected information is not what we would expect. So in this case, example, the small benefit exemption has been reported as €2,000. Again, the small benefit exemption only allows for up to €1,000 total for the year. So if you're reporting 2,000, then that would seem to us to be outside of the I suppose the regulations. So what we do is we return a warning message to an example that you can see here. The benefit cannot exceed €1,000. We will still accept that if that's submitted to us, and that'll be in our systems. And if at a later date you decide you've made a mistake, you'll have to come in and correct that. So again, following similar kind of processes to the payroll, corrections and amendments will have to be made where they're identified and appropriately updated. Again, what I would say is, while we're providing these warnings within our services, a third-party software provider may not reflect these warnings on your side when you're dealing with the third-party software providers. So again, that's where the reconciliation is necessary, particularly in the early stages, to make sure that you're satisfied that what's coming into us is what you expect, and just maybe doing a quick reconciliation to make sure that nothing's out of the ordinary. Another example of this will be for the remote working daily allowance. So in this case, obviously the amount being submitted is €50,000, which is way outside of the limits. Again, the information will be taken in by our services, but we will just flag it as something that you may need to look at, and as necessary make changes. Obviously, all the information we take in is fed into our central database and is there for analysis. So outliers will be obviously something that would be, I suppose, a higher risk, and something just to be aware of. And we're obviously cognizant of the idea that somebody could put in an extra zero somewhere by accident and things like that. So we're trying to do our best to minimize that. Okay, so the display back, so the ROS expenses and benefits for the employer. So this is, I suppose, a report that you can pull out of our system that'll give you high level information based on what you've already submitted to us. And this can be done on a number of ways. So you can see there either by recently updated run or by the tax year, the month, runs by tax year, runs by month, and reference and submission ID. So effectively what that will look like is an overview of a period. So in this case, you can see it's a recently updated run, and it just gives you the details that were submitted in that run reference. Can be done monthly. So again, you can go in to the client services, go into enhanced reporting, expense and benefits monthly report. And again, you pick a period within this and generate a report for that month. It's a high-level view of what was reported for that month with the run reference details, the submission date, and the totals. You can see there, again, this is like, I suppose, something for you to look at in conjunction with your actual systems that are recording this information to make sure that they match up as expected. The facility is in here to print it. There's no facility to download it, but you should be able to print it to a PDF and you could save it potentially that way. But they're the services that are there for these reports. As I said, the employee will also have sight of this. So the employee can go in and in their My Account services, go to expenses and benefits. and they will basically be able to view by year, on a similar high level that's provided for the employer. In this case, you can see where they have single employment or they might have double employments. They can go in and see it based on the individual employments or the employment IDs if there's multiple IDs for different employment in the same employer. Again, this is just high level information. The employee will be able to see this as of the 1st of January for any payments that are being reported. And then, as I said, I suppose it gives them visibility and make sure that they're transparent in all the information that's being reported for the employee. So that pretty much brings me to the end of the presentation. As I said earlier, there is information on our hub. So if you go to revenue.ie/ERR, all of the information that is available is up there at the moment. We are developing that over the next few weeks. There'll be regulations and TDMs and other information will be updated in and around the report requirements. There's also a link in there for people who, if they wish to attend seminars. So we're running seminars ourselves, and they're run between now and they'll be up till the end or the middle of November currently, and they may be extended. So again, that link, if you go into the hub, there's a link to Eventbrite there where you can go on and get yourself a ticket to an event that's suitable to you for a later date. But look, thanks again for your patience. Hopefully this has been worth the wait. And as I said, we can try and manage the questions. So Stephanie, again, apologies for the delays, but
Martin,
hopefully that was informative enough.
No, not technical issues always come about, unfortunately. I suppose, first of all, thank you very much for standing to the breach. I appreciate that, and I think that was very comprehensive. I'm going to say to the audience there, because we've run over, feel free to put into the Q&A any questions there, and I will take them offline. But a couple of things I just wanted to observe there, Martin, quickly before I let you go, is, sorry, somebody's just saying can't access the Q&A. Okay, I'll have a quick look at that now in 1 second. So the observations, obviously you've stayed very much in line since we've done the payroll modernization. So
yeah,
the familiarity is there in the same concept, it seems. One thing is, would it be fair to say is that so any expenses that fall into the normal payroll taxable rules or anything like that should continue in that way? So they don't need to be pulled out. So if I happen to pay my employee certain things that fall under USC, PAYE, et cetera, that stays as normal, just in summary.
Yeah, so I suppose the way to put it, like the enhanced reporting requirements is specifically aimed at non-taxed payments. So
yeah,
in legislation, like let's say for travel and subsistence as an example, that is an emolument that is effectively paid to an employee. Obviously for travel that's necessary and wholly and exclusively for the use of for business, and it can be made then without the deduction of the PAYE tax in USC. So
yeah,
any payments that are taxable continue to report it through payroll. And there's a good, actually, this came up at one of our sessions. Some software out there, particularly payroll software, records travel and subsistence in it.
yeah.
We're not getting that information from that software at the moment. They will have to split that into 2 separate reports if that software provider is going to use that same system. So I wouldn't expect or I suppose rely on the fact that you're currently recording travel and subsistence in your payroll software to mean that that is definitely going to be reported to us from the 1st of January. You need to discuss that with the provider just to be on the safe side.
That's no problem. And for the audience there, that our Sage, we'll come back on that piece on that. So the most important thing is where we would normally, as business owners, accept in a monthly, for argument's sake, expenses report with the receipts, et cetera, and we clip them and file them until we may need an audit, et cetera, and then we make the payments out. That's in summary what we're trying to make sure that the revenue is being made aware of now upfront is of those items there.
Yeah, basically.
And I just want to qualify one of the questions that came in there. From my understanding, Martin, was you said that there is no need to be reporting. They were asking about kilometres, but you're not recording the mileage. It's only the amount and the date of the event.
Exactly. So obviously there's requirements on the employer to record this information themselves. So if there was an intervention and a revenue compliance officer was looking for data around the qualification that these payments were made under, well then that supporting documentation should be maintained as it always would have been expected anyway. So yeah, the addition here is that on the date or before that date, the amount that's paid and the date the payment is being made available to the employee. Just particularly making sure you're picking the right category and you're satisfied that it falls within that category.
And just to confirm again, I think a question came in, but I don't, I think when they were asking about every day or weekly, it's not, it's based on the payment date to the employee.
Yeah.
So again, if you did pay the employees every day, quite an overhead and burden, but if you did do that, or you pay them weekly or you do it monthly, it's just to make sure that you follow the same rules there. It's on or before the payment is made.
Absolutely. And again, it's important to sort of reiterate that whatever payment method is there for pay. So if you're a monthly paid for your pay, this is a separate reporting requirement. So it doesn't have to fall in line with payroll in any way, shape or form, but in some cases that's the process that they operate. So yeah, so when the payment is being made, so that may be the case of every day. If that's the ad hoc nature of it for a particular business, then we would be looking at payments being reported daily. For the most part, we see something along the lines of maybe kind of they run 2 reports a week, or they run it kind of every month. We do have employers that are doing this every 6 months, so they may only be reporting something 6 months every 6 months of the year, and they give a lump sum payment for the previous 6 months to that employee or director. So again, depending on the process that the employer operates.
Of course, yeah. And again, I'm just double confirming there on a question came in. Obviously, BIK is not falling as this an expense or company car.
Exactly.
This is only the items that are paid that we're not under the taxable scheme as such, as we've already said.
Exactly. So BIK will continue to be reported as normal under the payroll submission. So if it falls outside the scope of VRR and won't be part of that.
Yeah, and Katrina, is going to pick up on your one there. Yeah, I agree. I think you've got it right here. Martin mentioned that an employee must incur an expense before reporting. If an employee gets a voucher, now I think you were saying that comes under a separate heading, isn't it, Martin? If the employee gets one of these vouchers that have been brought in, you report that. Even though you haven't incurred an expense, you still have to report it under the different heading of that, the small benefits claim, I think you said.
Yeah, no, and look at, just to clarify that example, I suppose, in particularly in relation to incurring the expenses, but is for travel and subsistence payments.
Yeah.
So the small benefit exemption is obviously a gift, effectively, or something to that value that's given to the employee. So that, there would be no expectation that the employee incurs anything in relation to that gift. So again, I suppose to go to the TDMs, if you go onto the revenue.ie/ERR hub, there's links to those 3 categories and the various parts of our website that explain them individually then as well, if people want to go there.
Yeah, no problem. I think it's probably, Martin, one of those things. It's we've recovered from the payroll modernisation and we just need to get our heads back into another new routine and that. But as you said, it's in legislation from the 1st of December, but if the employers can start, I suppose, getting themselves prepared from December on, whatever date that officially it gets released.
Exactly. So the services for making the submission through Ross will be available in December. So as I said, it'll be payments that are made as of the 1st of January or forward. So again, some people actually report payroll a week in advance to us, and then say the employee gets paid on the Friday, but the reported was on the previous Monday. So that's always been a facility. So it would be a similar process that'd be available. So you can do it on the day that the payment is made, and that's fine, or any day before that. But that service will be kicking off from the early December.
And Nora, I think I just want to confirm that I think we did just cover that. You're saying I report TNS mileage vouched every week within the payroll. Do I need to do something extra to report these? Yes, if they need to be now on this ERR. Okay. And how will these expenses be seen by an employee? Will they be input on payslip? No, remember the expenses, if I understand what Martin's just said to us, is all going to be under the ERR, so not under the payroll. As you quite rightly said, you're not even getting that information currently at the moment anyway.
Exactly, yeah. So the employee will have view of it in my account based on what's submitted under ERR. Obviously, the employer has their own facilities where they're providing pay slips, and in some businesses they put TNS on the pay slip, but that's not reported to us currently. And they are there.
You must do the separate reporting regardless of whether you're doing it on the payroll or not.
And that's it. That's it.
Yeah.
I double check with your software provider to see if they're part of the process, and they may be making it as seamless as it can be, which is like that. Again, if you're recording these payments in the same as your payroll, well, then it may be the most seamless way to do it, because they will then send us 2 separate reports instead of just the one payroll report that's currently coming in.
And as I said, we'll be following on. Sage has been in touch about releases coming up there, so we'll be in touch with that. If anybody needs to give any further questions there, I'm going to finish up there now. By all means, you can send it into the sales@pinbrook.ie and I'll pick them up there, but we will be sharing the recording. And once again, Martin, I really appreciate you stepping into the breach there. I'm sure there's going to be many more questions that we can answer for the guys.
Absolutely, no problem at all.
Thanks a million. Take care.
Okay, thanks everybody.